Dear ladies and gentlemen, Wienerberger's results for the first 6 months were especially influenced by a weak market environment in Europe and unusually bad weather. The start of construction was delayed by the long and snowy winter and further slowed by flooding in many parts of Europe during the months of May and June. Catch-up effects therefore failed to materialize in the second quarter, and we were unfortunately unable to make up for the declines at the beginning of this year. Given these circumstances, however, I am very satisfied with the group's performance during the first 6 months of this year. Due to the initial consolidation of Pipelife, a leading European plastic pipe producer, which we acquired in May last year, group revenues increased by 27%, and group EBITDA was up by 5% in the first half of 2013. The restructuring measures announced last year are now being implemented and delivered roughly 10 million of cost savings in the first 6 months. We use our cost leadership in the Eastern European brick business to strengthen our market positions through a proactive pricing policy. This supports the stable development of brick volumes in markets which, in part, recorded significant declines. In Western Europe, where brick volumes were lower, we were able to increase prices in line with cost inflation. The pipes and paver business showed convincing performance in a difficult market environment. Pipelife nearly offset the weather-related volume declines in Europe and weaker demand in the Netherlands, Poland and France, with orders from the international project business. And in spite of price pressures in some markets, held margins constant with strict price management. As a result, Pipelife delivered the expected 31 million contribution to group EBITDA for the first 5 months. The operational performance of Steinzeit-Keramo, our ceramic pipe business, also was on target in the first 6 months. Semerock, which was confronted with double-digit volume declines in some of its markets in Eastern Europe, increased earnings due to the successful implementation of cost-saving measures. The North American division recorded a moderate increase in volumes and an improvement in margins for the US brick business. Together with the consolidation effect of the American pipe business, this division reported an increase in revenues and earnings in the first half year. My outlook, ladies and gentlemen, for the final 6 months of this year remains optimistic. Even though we will not be able to compensate for the business lost in the first quarter, we are on target in all areas. I expect a stronger contribution to earnings from the European brick business in the second half year and stable development in the pipes and paver business. In North America, growth should accelerate throughout the end of the year. With respect to our restructuring program, we are well on track to deliver the expected 18 million of cost savings for the full year. Net debt, which always peaks at the end of June, should fall to 2012 level by the year end. The very successful international placement of our 7-year 300 million euro senior bond in April of this year provides further support for our strong balance sheet and gives us additional financial flexibility. Altogether, I do see Wienerberger well positioned, and we will work hard to reach our ambitious goal for the further growth.